Hey folks, welcome to Halftime Report. I'm Sonia Shenoy. With me are Ekta Batra and Mangalam Malu. Well, things are looking a bit sticky on the market, as we told you in the headline. The Nifty is actually facing a bit of a resistance at that 20-day moving average of 17,871. There is no real reason for this market to move above the range and pretty much stuck in that tight band with 17,800, 17,900 as a bit of resistance for the market. In terms of individual stocks, though, lots to look forward to. You have strong earnings coming in from the likes of Oil India, PB Fintech, Glenmark Pharma. So I'm watching out for these three stocks on the upside. Oil India, there's been a good improvement in oil realizations. For PB Fintech, their losses have gone down on a quarter-on-quarter basis. And for Glenmark Pharma, there's a good growth that it's seen in its US sales. But on the downside, as we told you, Balkrishna Industries, very weak numbers. Infoedge, where they talk about a slowdown in tech hiring. And Lupin, where the company says that price erosion is something that could continue. So these are a couple of stocks that, deserve mention. But otherwise, you'd have to say the market is a bit sticky at the moment, facing a bit of a hurdle on the upside.
Hi, Mangalam. Yes, hi, Sonia. Absolutely. 20-day moving average is turning out to be a little bit of a resistance after, in fact, conquering those levels last week on an intraday basis at least. But it is Brent crude as well as the US Jan CPI, which will continue to be top of mind. We've seen a rise which has taken place in Brent crude, so the macros seem to be surfacing again. US Jan CPI, we heard Mark Matthews talk in the morning. It is estimated to come in at around 6.2%. This is versus 6.5% in the month of December. If it does come in at 6.5%, he said it will be a disappointment to the markets. Lot of stocks in focus. Sonia mentioned a couple. City Union Bank continues to be in focus on account of the huge rise in slippages. Lupin follow-on selling in that one. Coforge is in focus. So a lot of stocks to discuss for the next 1 hour.
Indeed. And the only thing that worries me this week, or rather today as against last week, is the fact the mid-cap index, which was an outperformer all of last week, the Nifty was flat, the mid-cap index was up 2%. Today is underperforming. We have the mid-cap index down about 1.5% as against the Nifty, which is down 0.5%. And more stocks are declining than advancing. So there is some fear in the broader markets. And that's also reflected in the kind of rise that we've seen on the fear index, which is the India VIX, which is up almost 8% as we speak at around 14. But as we said, it is a stocks and results heavy session. So let's watch out for a couple of them. The first one on our show today is Tiwagar Wagons. Remember, the stock has rallied almost 2x in the last 12 months. And the results have followed. The net profit of the company also up by almost 2 times, 109% jump in their profitability. And, we do have with us Umesh Chaudhary, who's the MD and CEO at the company, joining us to giving us more of these details. A mild slip on the stock today in line with the decline that we're seeing in the mid-cap end of things. Doesn't hurt to worry, doesn't hurt to take some profits home as well. But Umesh, 102% jump in your revenues. Just wanted to understand if you could update the street on what your order book stands at right now, because the last public known figure is a little over 10,000 crores. If you could break that up for us as well, what's the order inflow expectation for the remainder of this year?
Yeah, hi. Good afternoon. Always a pleasure being with you. So as far as the order book is concerned, we continue to be at about 10,000 crores of order book, about 10,001 or 200 crores. So basically, the order intake has been almost in line with the execution. So we kind of maintaining similar levels of backlog as we mentioned last time. But in terms of the breakdown for the orders, bulk of the orders are from wagons. What is good is a good development has been that the private sector wagon offtake has picked up once again over the last few months. So we've booked.
Oops, I think there's some issue with your audio. Okay, yeah, go ahead. Sorry.
Okay.
So can you tell us from the Indian Railways, what is the next order that you're getting? I'm asking because there's a big focus there. The government is, going all guns blazing as far as railways are concerned. What's the order visibility like and what is the growth?
So we operate in 3 verticals: the freight rolling stock, the passenger rolling stock, and the shipbuilding. So freight rolling stock, we booked our largest order last year, which was for 24,000 wagons. We've seen this budget having announced an additional new age wagons that would be for about 60,000 new age wagons.
Okay, I think there's a little bit of disruption in terms of the audio. We'll try and connect with Mr. Chaudhary. But overall, he has mentioned that the order book has been around those 10,000 crore levels. They have been, in fact, looking to reduce the dependence on the wagon division and focus on the non-wagon division going forward as well. Currently, the stock is down around 2%, but it was actually quite a good quarter, which they've reported in terms of the overall performance. As you can see, that's the past guidance in terms of FY21, FY22, but nonetheless, strong amount of growth that you've seen. FY18, in fact, was a loss. We'll try and connect with the management at this point, but overall, good quarter, Mangalam, you'd have to say, from the railway company.
Good quarter from the railway company, and more than the railway company, you know, the entire sector itself has seen a big surge. In fact, the announcement that came in on the budget itself was the largest rail capex that was announced by the finance minister. And ahead of this news that came by, you know, the street was anticipating some sort of a turnaround in the railway pack, because if you just take a look at it, stocks of RVNL, IRCON and RITES, all the rail-related stocks have seen a big rally already, and Tiwagar Wagons was another beneficiary of the same. And that's the numbers are reflecting in that. We have Mr. Chaudhary back with us. You were saying that, you know, you have seen some pickup in orders coming in from the government in the new wagons, Mr. Chaudhary. 60,000 wagons is what was announced in the budget. When do you expect these to convert into orders, and how many of these 60,000 come to you?
So, the tenders for these wagons should be out in the next 2 or 3 months as far as the freight wagon is concerned. But the order that we signed last year is actually booking our capacity for the next 2.5 years going forward. So our visibility of the order book is already there for the next 2.5 years. And effectively, the new tender that will be finalized will be in continuation with that. So the railways have come up with a vision 2030, wherein they have kind of defined that railways will start carrying 3,000 million tons of cargo on the Indian railway track. And this is all a prelude towards achieving that target. So they are now, instead of doing a year-to-year kind of a planning, they first started with a 3-year planning, and now the railways are moving towards a planning up to 2030. So as far as our company is concerned, we have a capacity to produce now about 700 wagons a month. We are already almost touching that as far as our production is concerned, and we are in the process of ramping it up to 1,000 wagons a month. So within the coming fiscal, we should be able to ramp up production up to 1,000 wagons a month.
Okay. All right. That's on 1,000 wagons, and currently it's at around 700. So that's what you're indicating in terms of the wagon segment. But what about metros? You had indicated that you would be participating in the metro tenders. That would probably be a segment of growth for the company. Where do things stand there?
Absolutely. So we are now executing the Pune Metro contract. We have got the Bangalore Metro contract via CRRC in a tripartite arrangement. We have now participated in many tenders. We participated in Bangalore recently. We have participated in Surat, in Ahmedabad. And then we have participated in the tender for Vande Bharat along with BHEL. In fact, we are the only truly Make in India and Atmanirbhar consortium in that tender, which is a very, very large tender. It's about 60,000-70,000 crore tender. So we are waiting for the results of that. Having said that, you know, the new budget, the budget for this year also announces additional 300 or 400 Vande Bharat trains. So we believe that the tailwind that we have in the passenger train segment is quite substantial. We are now producing about 2 trains a month, which is about 6 coaches. We believe that we should be able to get to 20 cars or per month capacity, which we have now, in the next year and a half at the most.
Okay, so can you give us some numbers? You're sitting on 1,800 crores of revenues on 9 months of FY23. Where do you think you can end the year with, and what is the outlook for FY24? What can you do? Are you looking at 2,500 crores, 3,000 crores in terms of revenues?
So I would not be able to give you the forward, in terms of guidance. We don't give guidance. But if you really look at the history, so we were at a 300 crore annual revenue about 4 years ago. From that, we went to about 300 crore quarterly revenues about 5 quarters ago. And we are at about 760 crore of quarterly revenue now. So obviously, there has been a huge ramp up, and we still believe that most of the ramp up or most of the revenue for this quarter also has come from the freight wagon segment. So, you know, in terms of the other segments, which is the passenger train, which is the big engine that will drive our growth, this will start kicking in from another 2 or 3 quarters going forward. So we believe that there is a good amount of scope for us to improve the numbers even further.
So any chance of reducing your debt? I mean, I'm asking because the stock has had a really good run in the last 12 months. So on the balance sheet, I mean, since things are picking up, any chance of bringing down debt?
So we are a debt-free, long-term debt-free company. We don't have any more debt in the company. We've reduced debt in the last 2-3 years. We only have some working capital debt, which is about 150 crores, which keeps on fluctuating based on, the working capital cycle. But we don't have any long-term debt in our balance sheet.
Okay, all right. Things looking good then, Mr. Chaudhary. We wish you luck and let's see whether those orders come through as anticipated. Thanks very much for joining in and speaking with us. So that is Tiwagar Wagons. Very strong outlook, both from the private space as well as from the government space is what they are indicating at this point in time. It's been quite an outperformer in terms of a stock as well. Stock down around 1.5% at this point in time. Time for a short break. We'll get you more on the markets. A lot of stocks in focus.
Talk about some buzzing stocks now. The market is actually taken a turn for the worse. So the Nifty is now down 128 points. Infoedge is one stock that's taking a complete knock. It's down 12%. Rima is here to give us the latest on that. Rima, over to you.
Thanks so much for that. So when it comes to Infoedge, we have seen a slowdown in the company's growth rates. So this quarter, the company has seen a revenue growth of 33.5%. But if you compare with the prior 4 quarters, the company was growing at over 50%. So the growth rate for Infoedge has moderated. Now, most of Infoedge's top line comes in from Naukri, which is the recruitment services business. And in that, IT services has slowed down considerably. In fact, even Hitesh Oberoi acknowledged that we are seeing a slowdown in IT hiring, but the non-IT hiring market is doing well, and IT is approximately 50% of their overall revenues. Despite the moderation in their revenue growth, margins have improved for the company. EBITDA margins are at 39%, practically at an all-time high levels, the highest that we've seen in the last 21 quarters, and that's because the company has slowed down on its ad spend. Ad spend as a percentage of revenue has come down. At the bottom line, there is a loss this time, a loss of 84 crore, and this is because the company has taken an impairment charge of 276 crore. Now remember, Infoedge invests in a lot of startups as financial investors. They're called the investee companies. In one such startup called 4B Networks, which was started by the ex-founder of housing.com, the company said that 4B Networks is now facing a funding crunch and therefore it's struggling to raise money, and that's the reason why Infoedge has decided to write it down. The fear in the market is there a risk of similar write-offs in other investee companies? As of now, according to the company, there hasn't been any such case, but considering that Infoedge does invest in a lot of startups at the early stage, and if they're unable to raise the required money to scale up their business, will they have to write down their investment? So that's about Infoedge. Revenue growth slowing down, and there is a loss at the bottom line due to that impairment charge. On the flip side, we're also watching out for Coforge because a very large trade, 60 lakh shares changed hands in a block deal. This is approximately 10% of the equity, and Bearings, we understand, is the likely seller. Bearings, remember, is the promoter of Coforge, and the total value of the deal is nearly 2,500 crore rupees. Now, Bearings has been in the promoter of the company for the last couple of years now, but they have been paring down their stake. Their peak promoter holding was about 70% in September of 2020, and since then, in the last 2.5 years, they brought it down to now 30%. That's a substantial fall in the promoter holding, and that supply overhang is weighing on the stock. Back to you.
Okay, all right, Rima, that's on Coforge and Infoedge. Thanks very much for joining in. Yes, it is flashing on your screen that a lot of the Adani stocks continue to be under pressure. Adani Green, for example, Adani Total Gas, Adani Transmission, Wilmar, all of these stocks are lower by around 5% at this point in time, including something like an Adani Power. But the other stock in focus also has to be Lupin, because that stock is now down to the low point of the day, down around 7%. The commentary from the management in terms of the conference call, which was held on Friday evening, seems to have really disappointed the markets after they released their numbers during market or on Thursday evening. So there's further disappointment which has come in from after the call for Lupin. which is now at the low point of the day. Time for a break now, but we'll be discussing technicals, lot of stocks in focus, and the Nifty continues to be in focus. It's below its 20-day moving average. We'll join in. We'll be talking to Ruchit Jain on the other side. Stay tuned.
Welcome back. Well, the market is under a lot of pressure now. So Ruchit Jain of 5paisa.com is joining in to tell us how to approach trade. Ruchit, this is a weak start to the trading session. The Nifty is down 120 points, and there was no real negative trigger to begin with. But technically, do you think the texture has weakened, and do you see levels much lower than the 17,700 level? And what are the stocks you're looking at today?
Yeah, hi, very good afternoon. Well, I believe that the price-wise corrective phase for our markets is over when we corrected from that 18,800 to the budget day low of 17,250. But after that, we have now entered some time-wise correction phase where the markets are likely to consolidate within the 17,900 to 17,600 range. And the only factor of worry that we are looking is that FIS positions, because they have not only been selling in the cash market, but also in the index futures market. They have created short formations in this February series, and they have not started covering yet. If you see the long short ratio, around 18%, only 18% of the positions are on the long side in the index futures. So next trigger for the market would be this FI short covering. And until they cover their short positions, I think markets would see this time-wise correction where it would consolidate within the 17,600, 650 as a support range, 17,900 on the resistance end. So we are looking to play within this range on the index. If we get any dips towards that 17,650, I think it would be good time to take some contra positions and look for buying opportunities. So one should not get much panicked by 1 day of correction that we are looking at, but rather if this correction tend towards that lower end of the range, then that could be a good idea to take contra trades on the index. Now, as far as stock specific ideas are there, I have a couple of buy recommendation, but both from the capital goods sector. If we look at this, this sector, most of the stocks, if you look at ABB, Larsen, Siemens, Cummins, all the stocks have been holding quite strong in spite of this market volatility. So usually a sector of stocks which gives some positivity during the market's corrective phase, they tend to continue the outperformance when the markets turn up. So two calls, both from the same sector. First would be a buy call on Larsen, where L&T has given a breakout today. In spite of weak market, we are seeing a good buying interest in the options segment as well. So one can go long around current price with stop loss below 21.55 for targets around 22.75. And Siemens from the same sector, where we have seen previous breakouts, previous swing high breakouts have already been done. So I think this sector as a whole is likely to show some good outperformance. One can go long on Siemens also for short term with stop loss below 3,000 for targets around 33.70.
Okay. Richard, just a quick word. You said that one shouldn't worry about the losses that we're seeing today. Would that be applicable to the mid caps as well? Because last week there was a clear outperformance for the mid caps, and today there's a clear underperformance.
So I think that could be one of a day or 1 or 2 days where this down move could be there. Now, if I look at some positional charts on the mid cap, then in September 2022, the index formed a low of around 29,900. Again, after an up move when the index corrected, in December, the stock index formed a low of around 29,900. On the budget day, we have a low of around 29,900. So you can see it's a thrice in last 6 months. This Nifty mid-cap index have defended the 29,900, 30,000 range. So this indicates that till the support range is intact, positionally biasness is not negative. So I think, yes, it could be just 1 or 2 days where we would see some correction in the mid-cap index. But broader picture, if I see, then till this 29,900 is intact, I don't think that mid-caps would see some major crackdowns.
Okay, all right. Thanks a lot for that, Ruchit. Have a good day. For now, the market has extended its losses, not looking good at all. When we come back from the break, we have Hemant Jalan, the Chairman and Managing Director of Indigo Paints, who will join.
Just keep an eye on a couple of stocks. We are seeing incremental weakness on Adani Group stocks, down 7% for Adani, and ACC is the other one, which is down 4% as well. And Abbott is the other one, which is down about 4%. So that's the health of the mid-cap end of things, not looking particularly good at this noon time. But we have a bunch of numbers that came in as well. And Indigo Paints posted a sluggish set of third quarter numbers. Delayed monsoon and post-festive season slump too impacted demand. We do have with us Hemant Jalan, who's the Chairman and Managing Director of the company, joining in. Thanks a lot, Mr. Jalan. Always a pleasure speaking with you. Understandably, the third quarter was sluggish because of the reasons that we just spoke about. But you did say that November and December saw a bit of a pickup. So can you give us a sense of whether that pickup has sustained into the fourth quarter so far? And if you could quantify that as well, what can we expect?
So it has sustained itself, at least as far as January is concerned. We are still in the, halfway through February, so it's a little difficult to predict as far as February and March is concerned. But in general, markets have been very good in November, December, and January. I didn't say that there was a post-festive slump. I said that there was a slump because we had a very short festive season. Diwali was earlier this year, 24th of October. We had monsoons which continued almost till about 18th of October throughout India. So we had a very short festive season compared to last fiscal. And therefore, October sales were low, not just for us, but I guess for the entire paint industry. And I believe everyone has done well in November, December. I don't know about January, about others, but we have done well in January. So I see good demand continuing as far as the forthcoming future is concerned.
Could you quantify that? I mean, do we see double-digit plus growth, mid-teens? I mean, how is Jan taking place so far in terms of demand?
I will not be able to give you number figures for Jan because I guess we would not be able to disclose that until the quarter is over. But I would say that, see, now all the price hikes and all are behind us. So the numbers of growth looked artificially high during the last 4 quarters because in Q3 of last year, there was a 15% hike in paint prices.
Sure.
Also, during the last 1 or 2 years, whenever you were comparing a quarter on a year-on-year basis, usually the previous year had some disruption by way of COVID, etc., which showed optically a much higher growth rate than what normally you would expect to find. Now all that is behind us. Now going forward, neither do we have any COVID impact in the preceding year, nor do we have any price correction. And therefore, I think the paint industry as a whole should come back to that 11, 12, 13% value growth going forward. Hopefully, with our smaller base, we should do a little better than that, is our expectation and desire.
Sure. Mr. Jalan, that's exactly the point. You have, I think you're done with price hikes, and correct me if I'm wrong, because you haven't taken any. And hence your value growth has actually outpaced your volume growth in most of your segments. For example, cement paints on a 9-month basis, value growth is 28%, volume growth is 19%. Do you expect it to probably converge at some point? What is your guidance on both volume as well as value going into FY24?
Going forward, value growth and volume growth will be pretty similar to each other. So that difference that you see between value growth numbers and volume growth numbers is entirely an effect of the price increases that have happened. Now all that is behind us. So going forward from Q4 onwards, you would expect to see a very marginal gap, if any, between value growth and volume growth numbers.
And you're guiding for 10 to 11%. I'm sorry, I heard you say that about value growth for the industry. You would probably be the same.
I'm saying that for Indigo Paints, we obviously like to try and grow much faster than the rest of the industry because we are still a relatively young player as far as the industry is concerned.
Okay. In fact, since you're talking about that, I want to understand, I'm sure there's a lot of competition in the industry right now with so many new players, larger entrants as well. What is the market share that you enjoy at the moment, and what are you doing to combat competition? Do you think there would be pricing pressure?
So, there has been talk about one large entrant who is to enter, and that talk has been around for 2 years now. And I think their entry is still a year away. So at the moment, there is no change as far as the competitive landscape is concerned. And even when some players do enter, I doubt whether their entry would be so grandiose to be able to shake up the profitability or the margins inside the industry. It's an industry.
And what about your market share? What about your market share currently?
At the moment, our market share would be in the region of about 2.5%. Overall, as far as India is concerned, in the decorative segment.
Okay. And once your new plant in Tamil Nadu comes on stream, how much do you think you can see in terms of incremental revenues?
See, I don't think capacity should at all be related to sales values or volumes or market. So paint producers increase capacity when they see that in the next 1 or 2 years, you're going to hit some kind of a bottleneck in supply. And therefore, when you go for a capacity increase, you don't do it with the next 1 year in mind, you do it with the next 2 to 3 years in mind, so that you don't have to keep constantly expanding capacity. So an expansion of capacity, I think, is totally unrelated to growth in market share or sales. We have been growing reasonably well over the years. And therefore, with our existing capacity, we felt that there was a need to implement capacity expansion. Otherwise, 6-8 months down the road, we could have run into some supply bottlenecks. So it is with that in view that we are implementing this plant in Tamil Nadu.
Right. Mr. Jalan, always a pleasure speaking with you. Would have loved to speak more about your distribution strategy and, the Indigo 2.0 strategy that you have with regards to the 750 towns, etc. But that conversation for another day, out of time on this edition for Conversations with you. We'll take a short break. On the other side, we'll get you more on the markets and individual stocks.
A week for the markets. We have the Bank Nifty, which is down around 0.8%. The Nifty, which is shed over 115 odd points at this point in time. And the Sensex also showing a cut of around 0.6%. Talking about the entire banking space, and one of the stocks which continues to be in focus is City Union Bank. It's been a sharp cut that they've seen of around 14 odd percent at this point in time. The stock is down around 13.8% today, but if you look at it on a year-to-date basis at current reckoning, it's lost over 20% of its market capitalization as well. So the company did, or the bank did, address the divergence observations of the Reserve Bank of India this quarter, and that's the reason why you saw the slippages spike up as they did for City Union Bank at over 400 odd crores. So that continues to be the key concern. And if anyone's tracked City Union Bank for multiple quarters, it generally shows a very benign set of numbers. But because of this possible recognition in terms of divergence of observations, they've shown what has been an absolute weak quarter, especially in terms of the asset quality. Time for a break now, but on the other side, Manisha Gupta will join in. She's talking to Rishi Nathani, who's the Chief Business Officer.
Back and joining us on the show now is Rishi Nathani from MCX. Rishi, hi, good to have you. And a big day for you because the relaunch of the cotton futures is back here again. And we do understand that the exchange has worked hard in ensuring that the contract is now aligned as per the market requirements. Also, you've enacted a new product committee as well, where we do see more inclusion of various stakeholders. Tell us more about it.
Thanks, Manisha. So we are very happy that this contract has been relaunched and we've seen very good participation as of now. We've already seen roughly 17 crores of turnover single-sided since morning, and there's a good interest on the screen. And we are happy that all the market participants got together to revamp this contract and relaunch it.
Clearly. How would you look at the contract specifications different from what contract on cotton was trading on MCX earlier?
Yeah, so there are quite a few differences. First of all, now we are trading in candy instead of bales. So earlier it was a 25 bales contract. Now it's a 48 candy contract. Each candy is roughly 355.56 kgs, which means it translates into roughly 100 bales. So the contract value has gone up to a shade above 30 lakhs, and the margin would be roughly around 3.4 lakhs. Also, the tick size has increased from 10 rupees to 20 rupees, and the contract has become bi-monthly. So you have contracts of April, June and August available now instead of monthly earlier.
That's exactly what I was coming to, Rishi, as well. So as of now, we have April, June and August. As we draw closer to June is when we will see the next contracts being launched, is how the market is looking at it now?
Yeah, so normally you have 3 contracts for this season, and then we will launch contracts for the next season once we approach nearer to the 3rd contract.
Rishi, there has been a lot of back and forth that we've seen in case of cotton. I mean, almost 4 to 5 months of no hedging, and then we've seen a new contract coming in. What is the conversation now with the regulator and various stakeholders who you've onboarded now for conversations?
No, actually, everyone's on the same page, and that's why we've got this contract on board. And I believe everyone's now happy with this contract and looking forward to participating wholeheartedly in it.
Absolutely. We've seen that in numbers as well, Rishi, what you told us as of now. What more can the markets now look forward to? Because there are still a lot of agriculture commodities which are not trading as of now. Doesn't impact MCX as much, but a couple of contracts is what markets have been desiring on the exchange platform. Is there any conversation with the regulator as of now on that too?
So regulatory conversation will happen later. First, we need to evaluate what contracts we need to bring into the market, whether it's agri, non-agri. And once we have evaluated, we'll definitely take it up to the product committees, the ROC, and then approach the regulator for approvals. Once we get the approvals, you will see then those contracts being launched.
I was basically talking about the crude palm oil kind of contracts, Rishi, which are not trading right now.
Yeah, so with crude palm oil, see, the point is there are 7 contracts which have been suspended. We have also lost our crude palm oil contract. As and when the regulator and the government decide to relaunch the contracts, we'll definitely be looking forward to relaunching on MCX.
Okay, all right, Mr. Nathani as well as Manisha, thanks very much for joining in and speaking with us. Well, for the markets, it's definitely weak, over 100 points shed on the Nifty. We have the Bank Nifty, which is down around 0.8%, and the mid-caps, which are starkly underperforming at this point in time, so down around 1.4% currently for the mid-caps. Time for a wrap on Halftime Report. Business Lunch up next. Stay tuned.